Good afternoon and welcome to Camco Invest's virtual investors meeting. This follows our 9-month 2021 financial results. The meeting is in line with our ongoing efforts to enhance transparency with our stakeholders, namely shareholders, bondholders, as well as analysts. I'm Mustafa Zantout, Director of Marketing and Investor Relations, and joining me today are Mr. Faisal Sarkoo, Chief Executive Officer, and Mrs. Hana Taha, Chief Financial Officer. Our agenda for today will cover several topics. First, a brief introduction on the company, an overview on the events that took place during the 9-month period. Then we'll move into the company's business and financial performance. Finally, we will close by answering any queries that you might have or questions that you might have. Camco Invest is a regional non-banking financial powerhouse. We're independently managed. We're headquartered in Kuwait with regional offices in UAE, Saudi Arabia, in addition to Turkey. UAE, we're regulated by the DFSA, and Saudi by the Saudi Capital Market Authority. In Kuwait, we're licensed by Kuwait Capital Markets Authority as well as Central Bank of Kuwait. Our business sectors focuses on three main core businesses. It's asset management, investment banking, as well as brokerage. In terms of assets under management, today they stand at around 14.5 billion, and we're considered one of the largest asset managers in the MENA region. A study recently done by Forbes Middle East ranked us as the largest in Kuwait and 8th largest in the MENA region. In terms of investment banking, since the establishment of the company, we have been involved in several key transactions, and they are all worth around 27.9 billion. The company has a lot of unique selling propositions, and we're positioned to better serve our clients, whether it's through our placement power, regional footprints. Regional footprints, we're talking about the physical presence as well as our access to deals or clients in the region, comprehensive offerings, our insight through buy-side as well as sell-side research, track record, which we've built over time, our experienced professional, and most importantly, our client-driven approach. If we have a quick look at the markets and what happened during the past 9 months, we've seen that since the beginning of the year, businesses were activities were gradually returning back to normal following the pandemic that we have all witnessed. OPEC Plus output cuts will lead to a shift towards non-oil sectors in the region, and the expectations that the non-oil GDP will increase by 3.8% or grow by 3.8% versus 0.3% for the oil GDP. With the high or the increase in oil prices, it's expected that GCC countries will narrow their fiscal deficit during 2021 and will further improve in 2022. If we look at the oil prices, during September, we have seen oil prices at around $88 a barrel, which is 7 years high, and closed the quarter at 51.9% year to date and around $78 per barrel. If we look at the capital markets, beginning of September, we've seen very positive performances in most of the key markets. And then towards the end of September, there was a little bit of correction due to the fear from the Chinese, the default of the Chinese real estate giant. If we look at the capital markets, the MSCI World Index was up 11.8%, US was up 14.7%, and Europe 14%. If we zoom in on the MENA region, we see that the MSCI GCC Index was up 32.1%, where Abu Dhabi was the highest performance at 52.6%, Saudi Arabia 32.3%, and Kuwait 23.8%. We move to Boubader to discuss the business and financial performance. Boubader.
Yes, good afternoon, everyone. Thank you, Mustafa. So looking at the performance at a glance for the 9 months, the profitability stood at 8.2 million, the net profits for the 9 months. What is good and what we are proud of is that the fee income level and increase is quite strong. So the fee income has increased by 13.79, and this represents 61.2% of our total income. And this is a very important factor for us, that we have had a very good year. As you have seen, we are, as an investment company, we are in the markets, in the GCC markets, in Kuwait and the other GCC countries. However, our business model depends on what we call quality income, and that quality income is quite a significant portion of our total income. The G&A expenses have also increased, and this is a reflection of additional work that is being done and expenses that are generated by the extra revenue that is made. During this time, during these 9 months, the total liabilities have dropped by around 2%. The cash dropping also by 1.57%. However, when you look at the absolute numbers, you see from an income statement perspective and from a balance sheet perspective that we have a very strong and healthy balance sheet with strong cash levels, very manageable liabilities, and the equities, as you can see, has grown by 9.25 million KD, 18.49 from the beginning of the year until September, as some of what is generated also comes through the balance sheet and not necessarily all through the income statement. EPS, as a final note on this slide, is at around the 24 fils mark, which is a very strong level of earnings per share for 9 months, and compared to last year, where we had of course a strong recovery in the 3rd quarter last year, and that has resulted in a reduction in the losses that were triggered by COVID in Q1 and Q2 of 2020. So for 2021, as you can see at a glance, very solid performance. Next slide, please. Okay, I think I will spend a little bit of time here to talk about what was done in these 9 months across the business areas that have resulted in strong business activities, reflecting of a strong business model and a strong team that delivers on performance in terms of products and services. This slide looks at the asset management side. As Mustafa highlighted, Kamco has asset management, investment banking, and brokerage, the 3 core areas that generate revenue and manage client money and services and products. From an asset management perspective, the total AUM grew by 11.9% to reach 4.4 billion KD, which is $14.5 billion US. Of course, in July, during the 3rd quarter, there was a report issued by Forbes, which put Kamco as the 8th largest asset manager in the MENA region in terms of size. A deeper look at the equities and fixed income, I think over there, you know, the performance has been quite solid, outperforming many and respective benchmarks. If you look at up to September, the top 3 funds in Kuwaiti funds, Kamco Investment Fund, KIF, Al Durra Islamic Fund, and Kamco Premier Market Fund. And you can see the returns up to September of 2021. And these 3 funds, as of September, were the top 3 funds from all the funds that are managed by all the asset managers in Kuwait that are focused on Kuwait. Different mandates, and this reflects the diversity and the strength of the team. So KIF is different to Kamco Premier Market Index Fund. Both are on equities conventional side, and Al Durra is an Islamic focused equities fund. So both conventional Islamic, our team is leading the fund space. In addition, of course, a reflection of not just a matter of this year, but a matter of the past 5 and 10 years. The Refinitiv Lipper Fund Awards, which is a prestigious award, gave Kamco KIF fund, in this case, the best equity fund over 5 years and the best equity fund over 10 years. And this is very important, as you are aware, for asset management companies, is the stability the strength in performance over not just a short period of time, but over a longer period of time. So in essence, for the equities and fixed income, very pleasing performance by the team and giving results for our clients, putting us in the top rank for managing the equities. And here, you know, we talk about the equities in Kuwait, but the company does manage portfolios and other activities, not just in Kuwait, but out of Kuwait as well, in the MENA region in particular, and some exposure in the international, which we will see hopefully future products and services come from. The real estate side, very active year for our real estate team. We had 8 acquisitions in the UK and the US, properties totaling 343. This is the value that was raised during the year in this space. And this is, of course, not all that was raised for different products and services, but just in real estate side. So I'm very pleased to tell you, as our investors or prospective investors, that our selling capability is quite solid across all asset classes, services, whether in asset management or investment banking. But on the real estate side, coming back to it, today the team manages 22 different properties in the UK, US, and Europe. Those are totaling $1.5 billion of real estate managed for our clients. During the year, there was a distribution of 27.25 million in the 9 months. The average annualized cash distribution stands at 7.38 on the invested capital by our clients. A quick note on the venture capital. Of course, during the year, we launched what we call the Jedi Fund. This is, of course, in partnership with strong venture capital thought leaders who are working closely with us to achieve the objectives for this fund. We believe it's a very unique platform that focuses on international VC opportunities, and so far it has had a great start. It's, of course, in the fundraising mode. It's in the first leg of its fundraising, and we stand with the funds under management right now at near the 25 to 30 million mark dollars. And of course, the objective is to reach $100+ million under management in this space. Already, the fund has entered into very strong opportunities that have already been marked up due to their attractiveness, and with other investors coming even as follow-ons to our fund. So watch this space. We will highlight more as we move forward and see the performance of this exciting product. Our special situations team in the asset management side, of course, has mandates focused on, from the name, special situations. They were focusing on continuing their exit negotiations for a number of the clients that we have. During the year, successfully exited a number of assets, most notably a 24% stake in a listed company that was worth over 10 million KD. The total that they have realized in exits and the achievements for their clients is nearing the $39 million US. The private equity team, or in the asset management division, of course, the private equity funds are at liquidation stage, so exits have been in process according to their mandate, being closing these funds. During the year, 4 successful exits in Saudi Arabia, UAE, Kuwait, and India in different sectors, and this was done with the success, as much success as possible, given the circumstances and the situation. Now, still, it has a number of portfolio companies with challenges, and those challenges have, of course, come from the COVID disruptions that have hit hard those businesses. Now there's a stabilization period. However, the team is working hard on dealing with these challenges to complete the exits on that front. Looking at the investment banking, brokerage, our regional approach and digitization in this slide. Investment banking, of course, quite a very active year. Keep in mind that there has been a bottleneck from 2020 as well that has spilled over to 2021. But quick look at the 3 core areas in investment banking. On the debt capital market side, the DCM side, The team has been successful in being a lead manager and a book runner for 6 debt issuances that have raised $2.48 billion. And this, we are proud to say, has been done across the region. The very first deal in Saudi Arabia and the very first deal in Oman have contributed as well to a more regional approach to how our debt capital markets team is operating. Very successful year, of course, for the year so far to September. The ECM team, of course, has also had a busy time, being a lead manager and an agent, a subscription agent for a private placement on a logistics company, in addition to being an issuance advisor and an agent to 2 rights issues for listed companies in Kuwait. Those are the key deals. There are other deals as well, but those are the key deals that were completed year to date. On the M&A advisory side, of course, being on the buy side and the sell side, the team has worked on multiple transactions. Here, what we highlight, being an advisor for a buyer for a majority stake in an unlisted Kuwaiti insurance company and a listed Jordanian insurance company. On the sell side, of course, an advisor to the sale of a majority stake in a UAE pharmaceutical company and a minority stake in a Kuwaiti listed company as well. On the brokerage side, of course, our activity in brokerage is run by our subsidiary Al-Ula Al-Wasata. And just to highlight that they continue to attract new clients with, of course, different means, but also focusing on their online trading platform. And they have completed the MD3 testing for the netting, which hopefully will provide the company with a new and stronger revenue line and stream for the business. Regional presence, of course, to highlight, as was highlighted by Mustafa, we have our core businesses residing, of course, our company in Saudi Arabia and our subsidiary company in the IFC. These 2 companies continue to strengthen their presence in their respective markets, growing, and we are very pleased to say that they are increasing their contributions to our core businesses, especially on the asset management side, where sometimes you are pleased to see that even full deals can be done out of Kuwait on certain transactions for our clients. So this is really a strength that is growing in our regional side. From a digitization perspective, and I think hopefully you'll watch this space, especially in 2022, as we launch more of what we are doing on the digitization side. But up to September, we're talking about the first phase of our Kamco Invest app that was launched. We launched Iktatib, which is an online placement platform for IPOs and private placements. And this has been a great contributor to being able to interact digitally with clients who are interested in IPOs or private placements. And this, of course, only applies to our clients. The testing phase right now, the team is undergoing for the launch of Premier online trading service for international markets, ties up strongly to what we mentioned earlier on the asset management side of looking at more international markets and creating products and services for our clients. Just a quick look at the growth trajectory over the years. I think we keep this slide every time to show our investors how we're growing overall. Very pleasing to see that we are at this level of assets under management, despite all the difficulties and activities or milestones over the years. We mentioned 2 of them here, or actually 3 of them, where we had the international crisis and that had an onset for a number of years in 2008. We had, of course, for us a major event as well in 2018-19 with the acquisition of Global Investment House and the merger, and of course the COVID period, which was a tough period we're all recovering from. The overall growth has been a very healthy 13.5% since inception. So our AUM has been growing strongly, and the quality of our AUM, which is critical, is as well a critical factor for us in our growth phase. We talked a little bit about this. This is another look at our financial performance. Maybe now Hannah can go into the details. I highlighted the top level issues, but maybe Hannah, if you can take over and just go over some of the key details in our P&L, in our profit and loss statement and balance sheet.
Thank you, Mubader. Good afternoon, everyone. We'll start here, talk about some analysis about income statement analysis and revenue side. Total income increased by 95.9% to reach 21.9 million KD, compared with 11.2 million for the 9 months 2020. For Q3, fee income in the first chart, Q3 reached 4.8 million fee income, compared with 3.5 million KD for 2020, with the total fee income 13.4 million, compared with 11.8 million for the 9 months. Also, if we look at the second chart for Q3, total income reached 6 million, compared with the 6.7 million KD. The major item here contribute to the revenue side. It is net gain on financial assets at fair value through profit loss. It is increased from 2.8 million loss to 4.5 million profit. Also, share of result of associate from 1.98 million loss to 2.2 million profit. Next slide, please. Here the general and administrative expenses analysis. General and administrative expenses increased by 15%. General and administrative expenses to fee income stood at 0.86 times in 9 months 2021, with net profit 8.2 million, compared with a loss of 1.35 million last year. If we look at Q3 expenses, so it is 3.4 million compared with 3.3 million KD. It is almost in the same level. But if we look at the 9 months, it is 11.5 million compared with 10 million KD. For the finance cost, we can notice here cost saving from 2.4 million to 1.6 million, almost 800,000 KD cost saving, 32.6%. Next slide. Financial positions. The total assets increased by 6.76% from 118.7 million as of December 20 to 126.7 million KD as of end of September. Cash and cash equivalent represent 24.8% of the total assets. Investment to the total assets 54.8%. The major change in assets, it is in the financial assets at fair value through profit loss from 20.8 million to 25.7 million. Major change also here, investment property from 716,000 to 11.4 million, and property and equipment from 10.7 million to 1.3 million. Next slide. Liabilities and equities. Total liabilities reduced by 2% from 64.8 million to 63.5 million. Loans reduced by 27.6% from 6.9 million to 5 million, almost 2 million KD reduction in our loans. Net debt to equity 0.23 times. For owner equity increased from 50 million to 59.2 million KD, 18.5%, and return earning increased from 8 million to 15 million, total increase almost 86% in the return earning. And credit rating by Capital Intelligence as of May 2021, BBB long term, A3 short term, and stable out. Thank you.
Thank you, Hannah. Thank you, Mubader. We have some questions that we would like to address. Mubader, a question about the drop in Q3 net profits compared to Q3 2021 compared to Q3 2020, where profits have dropped from 2.5 to So the question is, what's the reason behind this drop?
Of course, the drop is associated mainly with lower investment income that was impacted by the market's performance. Although the markets were up in 2021, this last quarter, the growth that was seen is much lower than what it was in the same quarter of 2020. This, of course, has resulted in that drop. But one thing that I'd like to highlight is that the core businesses, and I mentioned this as an overall view, witnessed a remarkable growth during this quarter. I mean, our fees and commissions increased in this quarter, in this third quarter, by 35.9% to 4.8 million for the entire quarter. So the story, despite the fact that you may say that the quarter has dropped, quarter to quarter, when you compare, there is a drop in the net profits. This is, of course, a reflection of primarily what I mentioned in the sense of the lower investment income on the market's performance, quarter to quarter.
And regarding the contribution to the increase in fee income, what are the major aspects that have affected that?
Of course, we mentioned that we have a strong fee and commissions income level, which is a focus for quality, and it is the type of income that is recurring. In addition to this recurring income, we have to also highlight that there were incentive fees generated on managed assets. We also launched new products and transactions in the real estate and other areas, as mentioned. Also, the activity of the investment banking has been quite strong, and a number of advisory and closed deals happened during the period that has resulted to this increase in deals. So the IB deals is a critical factor as well. In addition, the bigger activity in the markets has contributed positively in trading fees from our brokerage arm, Al-Ula Al-Wasata.
There's a question to Hana regarding the increase in expenses from 10 to 11.5 for the 9-month period compared to last year. They're asking what's the reason behind that increase?
Actually, this increase, it is a natural increase, and it is associated with the increase in revenue. Even if you look at the chart of the general expenses and the total revenue and net profit, you will see during Q2 our revenue reached almost 10 million, and this is the and during Q2, look at the total income in Q2. We reached 10.8 million, and in the same Q, you'll find the increase in general and admin to 5.2 million. But again, if you look at the Q3, so our expense is 3.4 million, and our profit is 1.9 with the revenue of 6 million. So it is associated with the increase in revenue, actually. Thank you.
Gulbadar, another question about the regional expansion. What's the strategy moving forward, the growth strategy of the regional expansion?
Of course, I mentioned earlier on that we have our regional presence in the IFC and Saudi has been strong. We are strengthening this presence more so that it can enhance the contribution to the company's overall growth strategy. And it's really pleasing to see that we have a lot of business that is being generated from our subsidiaries in Saudi and the IFC. Of course, our current focus is on strengthening our Kamco Invest Saudi, which has a huge potential in the markets. You know, we believe that the Saudi market is a critical market. It is the strongest market in the MENA region, and our presence there is very critical for our growth strategy, and we believe that we are capable to grow more and more there. And I want to highlight that the DIFC team as well, or the company, our company there with our CEO there, what we have done in 2020 and 2021 were a reflection of the fruits of the work that was done earlier on since the establishment of the office, and has contributed significantly. And we believe Saudi which is also contributing, can do even more, and that's part of where we see also adding to our overall growth in our region approach. And that is a critical factor in our expansion strategy, other than our products also being regionally exposed, having regional investors more and more as we have more products and more services, provide them through our subsidiaries in both core markets for us.
Thank you, Badr. These are that was the last question that we received. Thank you, Hannah, also. With this, we come to the end of our virtual investors meeting. We thank you all for your participation. We would like to remind you that the presentation will be available on our website, camcoinvest.com. And should you have any queries, you can refer back to our investor relations section on our website. Thank you.
Thank you.
Thank you.